Welcome back. Is the mortgage delinquencies on the rise in today's current housing market? Let's dive deeper. Specifically, I'm going to talk about the FHA and VA loan delinquencies. FHA are Federal Housing Administration and VA are Veteran Administration. The VA are loans that are purchased by veterans, military veterans, and FHA, a Federal Housing Administration, are basically a owner-occupied primary buyers who's typically using government-backed loan. Federal Housing Administration, typically buyers, they put 3.5% down payment for owner-occupied purchases. So let's dive deeper. And let me share my screen here. And the headline, as reported by Housing Wire, mortgage delinquencies rise slightly Q1 of 2025. Like I said, FHA and VA loans, I'm going to emphasize this a little bit. By the way, I've been a real estate investor for several decades and have consulted hundreds of real estate investors to buy regular cash flow properties, investment properties throughout the country in specific markets. However, I am also a U.S. Army veteran, 20 years in service, retired back in 2002, and I'm also a VA foreclosure expert and helping investors. So let me hold that thought toward the end of the presentation. I will share with you what types of VA foreclosure investment opportunities are available to anyone out there who qualify. So hold that thought. Let me finish this initial article based on the current status of the mortgage delinquencies and foreclosures potential throughout the country on a regular loans and FHA and VA loans as well. All right. So very timely information. Don't you agree? So the delinquency rate for U.S. residential mortgages rose slightly in the first quarter of 2025. This is partially driven by an uptick in conventional loan delinquencies and rising foreclosure inventory, particularly among loans backed by the U.S. Department of Veteran Affairs, VA. By the way, over the past 30 years, I've been around the block, trust me. I have purchased and owned primary homes and investment properties through the VA, 0% down payment, Veteran Administration. I'm not going to get into that. I produced other videos over the years about how to use 0% down payment to house hack, live in one unit and rent out the others, 1 to 4 units, house hacking. I'm a professional serial house hacker, but I'm not going to talk about this in this video. So let's continue with this. MBA Tuesday announced that the delinquency rate for all the mortgages in the U.S. 1 to 4 units have increased to 4.04% of outstanding loans in the first quarter. Is that a cause for concern? Not at this particular moment. So the percentage of loans entering foreclosure also edged higher, risen by 5 basis points to represent 0.2% of outstanding loans during the first quarter, a mere 2%. So nothing to be concerned about on a historical basis, but I will share with you more data. How does it impact everything? So delinquencies on conventional loans increased slightly, while mortgage delinquencies on FHA and VA loans declined, said Marina Walsh, MBA's Vice President of Industry Analysis. Foreclosure inventories increased across all loan types and particularly for VA loans. Wow, interesting. Veterans in the country are having a little bit more stress in their situation compared to the other buyers, owners. But however, the overall national delinquencies and foreclosure rates remain below historical averages. For now, I don't know, based on the current economic uncertainty, the tariffs, and some people are worried about their jobs. Potentially recession is looming. So there's a lot of the tariff and what's going on with that. Some people are worried about their jobs. So again, there's a lot of economic uncertainties. A lot of people are a little bit nervous about their situation in the housing market. But I don't know. You share what you comment below. What do you think about what's going on? How do you feel about the overall economic uncertainty going on now in all aspects of the economy and the housing industry? Let's continue. VA loans saw the sharpest gain in foreclosure activity. The percentage of VA loans rose 0.84%, the highest level since the fourth quarter of 2019. The rise in VA foreclosures can be attributed in part to the expiration of a temporary moratorium. A voluntary VA foreclosure moratorium was in effect through the end of 2024 to allow time to implement the VA's servicing purchase program. That program has since ended without replacement loss mitigation option approved by Congress. Further increases in the foreclosure rate could result if economic conditions worsen and loan workout options are unavailable. So I have some personal thoughts about that. I'm going to share with you toward the back end of this video that there's a slight uptick in VA foreclosures, and that spells opportunities for savvy investors out there that I can help with. So and I'll give you a lot more juicy details that you're not going to find anywhere in any sources. So consequently, there are some foreclosure purchase investment opportunities, be it very limited, but I have access to this system, process, or procedure. Why? Because that's what I have done. Not only I helped regular mom and pop investors throughout the country to buy turnkey cash flow properties in affordable markets, in the fastest growing markets. I also, on the side, helped have access and have experience and with purchasing investment properties, VA foreclosures throughout the country. All right, hold that thought. I'll share more juicy details later at the end of the presentation. So let's continue here. By loan, the breakdown by stage and loan type. Conventional loans saw their seasonally adjusted delinquency rise 8 basis points to 2.7%. FHA loans have increased to 10.62%, and VA loans have increased to 4.63%. Let me tell you why the VA and FHA delinquencies on a historical basis are higher, slightly, not that much higher, than conventional borrowers. Again, conventional loans, typically you pay 5 to 20% straight up, right? Those are very, very well qualified buyers. However, VA loans is 0% down payment. There's very little skin in the game. And FHA is only 3.5%, right? So you can make the argument that the FHA and VA buyers are a little bit below quality versus the conventional owner-occupied buyers. Do you agree with that assessment? But on a personal basis, it's not that bad. The increased comparison are not a big gap. It's not a big concern, contrary to what some people believe, because you still have to qualify for the loan to get the VA loans and the FHA loans. But since they put so little down payment, there's very little collateral or require very little skin in the game, if you will, especially for those FHA VA buyers who purchased the home in the past few years during the high mortgage rate environment that we have saw since in 2023, in 2024, in 2025, when the typical mortgage rate is around 6.5% to 7%, and the housing prices have not increased that much in the past 3 years, ever since the pandemic housing boom that has essentially ended in the middle of 2022. I know we saw a tremendous amount of equity growth, tremendous amount of appreciation during the pandemic housing boom back in 2020 to back in March of 2020 to around the June of 2022, when the mortgage rates was skyrocketed from 3% to 8% to 7 or 8% actually. Again, so the buyers that purchased, not just VA and FHA buyers, but any kind of buyers who purchased in the past 3 years, they may not have that much equity in their homes. So this group of buyers who purchased in the past 3 years or have a higher degree of delinquency. Does that make sense? I'm sure it does. Please comment below. Let's continue. Foreclosure and serious delinquencies, as you can see, during the housing crash back in 2008, we have some extreme foreclosure situation. Obviously, since then, we have the rates has gone drastically down. We have seen very little foreclosure out there in all aspects because most people have so much equity in their homes, and most people are locked in with extremely very low historical mortgage rate to from 3 to 5%. 80% of the homeowners now have rates below 5%, and 40% of the homeowners in the country have no mortgages at all. So that's a lot of locked in effect still going on to this day. That's the reason why we still have a relatively high demand and still have low supply of inventory throughout the country. I know there are some areas that are a little bit different. Real estate is local. Different part of the country have different situations, but overall, people have more equity than ever in the history of America. So that's a good sign for those reasons. But again, if the economy is still continue to be challenging, if the labor market breaks for whatever reason, yes, we may see foreclosures uptick in all types of homeowners, not just FHA and VA. Does it make sense? Let's continue. The 5 states that experience the most significant annual increases in overall delinquencies are 1, Florida, 2, South Carolina, 3, Georgia, 4, Delaware, and 5, Wyoming. So the serious delinquency rate, which is loans 90 or more days past due or already in foreclosure, stood at 1.63%. So not that bad from a historical basis. So at this particular time, there's no foreclosure crisis that I could see based on the data that I share with you. Now, so to conclude my presentation, most people are not aware that there are information available for people who are already, for the VA owners who foreclose on their loans, unfortunately. Again, because of my vast military background and the unique niche that I do, or what I do as a real estate expert, I'm not aware of any other consultant or person out there who understand the veteran administration foreclosure process to the extent that I have, because of my background. So for the past 20 years, I helped some relatively savvy and sophisticated real estate investors to buy the limited amount of VA foreclosures out there in the open market. So I'm going to share with you some details. I'm not going to spend too much time. I've produced VA foreclosure videos 2 or 3, 4 or 5 years ago, but since then I have not produced too many videos on a VA foreclosure opportunity because in a way I don't need to, because I have a small group of investors that I work with within my sphere of relationship. I helped. Anyway, so I'm going to share very briefly this VA foreclosure listings. It takes a while. It takes a year or more, depending on what state, for the Department of Veteran Affairs to finalize a foreclosure on a person, on an owner. The foreclosure process takes a very long time. So from the time of initial delinquency to the actual foreclosure auction. So it's a long timeline. It's a game that most people do not understand. The foreclosure system is very challenging, and only the expert out there that understand this kind of situation. And to the extent what I just said, I'm one of the few, if any, VA foreclosure expert that can help investors to buy this kind of deals. So let me share with you some sampling. So there are VA foreclosures, not that many on any particular week on this particular website, like several hundred that comes into this particular website from all over the country. VA foreclosure occur all over the country. So what I do is, because of my understanding of VA foreclosures, because I also help regular investors buy in many different parts of the country for many years. So I have a high level understanding of what location, what market, and what kind of deals are available for investment properties, including VA foreclosures. So with that said, I'm going to give you a small sample. Look, I pick only the best. I pick VA foreclosures that have a low entry point, that have a very rehab that are required. And I pick a good location, good rental market, good appreciation potential. So I understand all the fundamentals and economic drivers of each particular area. Of course, I don't know, I'm not an expert in all 50 states. I understand the VA foreclosure specific markets such as Texas and Florida and Virginia and a few other places that have a higher military concentration than other markets. Anyway, so with that said, here's just a quick sample of some of the property. Look, this one's in San Antonio, Texas. This is very desirable. A lot of these prices are too high. I don't factor that because you cannot cash flow. So this is an investment type of opportunities. Buy VA foreclosures from the Department of Veteran Affairs. I don't buy in the bad areas. I don't buy, or I don't help investors to buy in this high price point. A lot of these properties are too high. You can't cash flow. Look, some of these foreclosures are 1.2 million. Some are very low price, located in Midwest. I try not to buy in the Midwest. Is the locations are not all that great. I mainly focus on South and Southeast, Texas and Florida, and few other good areas in the Sun Belt area. That's my focus. So there's a lot of different type of houses listed here, different price points. So it requires a lot of due diligence. You have to, like I said, I help investors to buy these kind of foreclosures. By the way, these kind of foreclosures, all you need as an investor is 5% down. 5% down, no PMI. So I help people, a handful, to buy this kind of 5% down for investors. You can be any investors in the country as long as you qualify, as long as you have experience, you own at least one rental property, you have a good FICO score, you have a down payment. I can help you purchase in very specific areas to buy. Of course, I charge a fee. And so contact me if you are interested, if you're sophisticated, somewhat sophisticated, you own at least one rental property, you qualify. I can get you some great deals. It's not going to be easy. You have to do a lot of bidding, a lot of negotiating, a lot of back and forth, which is very few, if anybody out there in the country understand the VA foreclosure process, but I do. All right. That's all I have to say. Thank you so much. I know I gave you a lot of information. My contact information is below. But if you receive any value whatsoever from this video, please like and subscribe and comment below. And also, if you want to learn more about any investment opportunities, wherever you live in countries, please put your email on my website below so you can become a free member of my real estate investment network. Once you become a free member, you will receive on a weekly basis great information about investment opportunities, a lot of great education about all aspects of real estate investing into your email inbox. So ultimately, hopefully you can take action on some of the opportunities that are available to you. That's all I have to say. Thank you so much. I'll see you on the next video. Bye-bye.